Okay, good morning, everyone. Welcome you all for the day 8 of the live mentoring program. So, team, how things have been? So, after yesterday's volatile markets in terms of the mid cap expiry, I think many sellers, as I was pointing out, have been cribbing. That is the way it is going to be. So, we cannot be complaining. Rather, we needed to change and adapt. If you are a buyer or a seller, many have been having a lot of thinking in your mind whether the new extension and timings, whether it is going to be a good news for the buyers or it is going to be a bad news. No one knows. Similar to the way where it is now, no one knows. In fact, we started seeing the daily expiries. It has been a plus and also a minus. When I say plus, it is getting more and more concentrated on certain indices to be trading on certain days. Earlier, we are used to trading only Bank Nifty. Now, on that particular day, if Midcap Nifty is expiring or Fin Nifty is expiring, we are starting to concentrate on that. So, what will happen in this scenario? Earlier, someone who was looking at only one particular index, trying to gauge the information, now you needed to look at several indices and what are the contributors for those indices and how it is going to be moving. So today it is a Fin Nifty expiry, but the interesting thing is Fin Nifty and Bank Nifty is almost a similar one. And what has happened yesterday in terms of the global markets? If you look at the global markets yesterday, the Dow almost went into the flat territory. It didn't do much. It closed almost 40 points in the green. S&P also almost closed in the green, and the Nasdaq as well. But today morning, for some strange reasons, you can clearly see the Asian markets are under tremendous pressure. When I say tremendous pressure, Nikkei is already down by 1%. Same goes with Hang Seng as well. And last night, the DAX, CAC, and the FTSE all went over 1%. With this, what we can expect now, our markets, which was expected to be bullish based on yesterday's closing and other things, because they have recovered almost 200, 300 points from the day's low for Bank Nifty, almost 50 to 80 points on the Nifty. But currently, this is putting a lot of pressure on our markets too. Nifty is just trading flat, and you can clearly see the rupee is heading higher, the dollar index is heading higher, and I also mentioned about the bond yields, right? So bond yields has been steadily going higher and higher and higher. If this is going to be keep going higher, that means the inflation is not cooling out. When the inflation is not cooling out, Fed will have no other option other than to hike the interest rate. Honestly, if you would have asked me 1.5 years back whether Fed would be like in hiking the rates like this, no. Because after 2015 or so, if you look at if you're looking at the interest rates in the US regime, you wouldn't be seeing the interest rates going beyond like in 0.5, 1% and more. Now something which is going towards like in 4, 5, and probably some are even predicting 7%. If that goes, I don't know, God save it. The reason is the developed economy is having that much of an interest rate, and imagine a country like developing country like India. So we should be having higher interest rates compared to them, and then that will be like a big dampener for all. And I'm sure there is going to be some kind of an event which is expected to happen. We do not know whether it is going to be a bond yield event or it can be some other event as well, but market is factoring something which is going to be happening pretty soon. Okay, the way the things are, and they are not able to even move beyond. At this juncture, if you look at it, both like in the global markets and our markets, they are just like in getting stuck at a level. Our markets getting stuck at a level because there has been consistent selling, which is coming from the foreign institutional investors, and these guys are not willing to buy every opportunity. They are exiting it, and it makes sense for them to exit because when the dollar index is heading higher and higher, they're not going to be making much money in India, and that makes sense for them to head higher. And also, one reason is we have had a crazy rally in the last 6 months. And one more thing which is going to be happening is in the next 6 months to 9 months, we have a lot of elections happening in India, be it the local elections or be it the parliamentary elections, which is going to be scheduled. We have a lot of things on our domestic front. What normally happens during this phase? When we have a lot of domestic events happening, our market tend to react more on the domestic news. Probably once you get to that MP election, Rajasthan election, we might see some kind of an position changes and everything happening. What will be that? Imagine the current government like it takes over, right? Like and if they come in power and again, there is a positivity which is going to be there. Or if the opposition is going to be taking over, then there is going to be some kind of an constraint which will be coming in. The reason is, uh, currently they know this is what is going to happen, and the continuity is what the market likes. When there is no continuity and there is going to be uncertain things, the policy uncertainty, that is something which they will be really worried about. Ranveer, in terms of the debt ceiling issue and other things, this usually occurs every once in a while, and I don't think that will be a major factor because the Congress will pass the debt ceiling limit. What is that? The amount of money that they will be able to borrow. So they keep on increasing it. So what is the debt ceiling in terms of how much is the debt that we can buy it in a particular quarter or a year and so on. So if the debt they are going to be like in what to say meeting those requirements, again you will see that it is getting going to be getting increased. That's the way these guys have been doing it, and I don't see that is going to be a problem. Now, if you look at today's market action, it is absolutely muted. When I say muted, this is your VWAP, and the market is literally doing nothing other than just going one or two candles above, one or two candles below, and then staying exactly at the VWAP territory. Dow futures, this is something which will be the one which can trigger you the moves today. So mother market is currently trading in the negative, and that is dragging the sentiment across. And in terms of the Nifty, it is also doing the same thing. I believe yesterday's after a violent expiry, everybody wanted to take a breather and then be in a calm mind. And looks like the Fin50 expiry is on the news with wherein both buyer and seller are going to be agreeing to a terms, wherein we are not going to be doing much. We will take it to a next level. Now, talking about that, what does the trending OI data suggest? I'll just give you a quick glance on that. If you look at it, it is around, this is on Nifty, 1.46, 1.57. Hardly any difference. When you see hardly any difference, just immediately go into the option chain page. Just check that. If you look at it, 9.5, 10. Almost you have similar kind of an IV levels. When you see the OI plus the IV almost at the same level, this is a writer's paradise. This is a writer's paradise. And you can clearly see the premiums are the ones which is getting melted on both the sides. But what is that the writers will be able to do? Considering it's a low IV, they don't have much of premiums to write. And you can clearly see they don't have much of premiums to write, hardly 15 rupees on the call side, maybe around 1 or 2 rupees on the put side. So nothing which will enable them to say we are going to have a stronger end. This is ideally not a good market for even the sellers, not a good market for the buyers. As a buyer, now what we want? We want the momentum. If we are able to get the momentum, then the market will give you an opportunity to play on either sides. This is on Nifty. Look at the Bank Nifty, 11 and 14. And you can clearly see since the market is going down, IV on the put side is higher compared to call side. This is exactly the scenario which we wanted it. Perfect. IV is good, the market is going down, and everything is working in your favor. And you can clearly see when the IVs are higher, the premiums are also going to be higher. When the IVs are lower, that means it is steadily getting dominated by the sellers, and you will see the fall happening, but not in a fast manner. If the IV would have been higher here as well, the premiums would be falling faster and faster. Now, what is the only thing which is missing now? IVs are good. We needed to see the confirmation happening in the Bank Nifty with the volume. As long as it is going to be staying near to the VWAP, still the buyers will have some hope. And if you look at the RSI as well, what is the RSI trading from morning? Can you see? Did it go either above the 50 mark or did it go below the 50 mark? It is just staying between the 40 and 50. When the charts are saying, Shiva, we are not headed anywhere, the RSI is going to give you the clue. When the RSI is giving you a clue, why you wanted to go and take an aggressive trade? Wait for it, wait for it. Because all of a sudden you can see the premiums getting melted. That can be happening when you see this kind of a data. You can clearly see the put premiums are a little higher. This is on Fin50. Even here, the call premiums are higher. Okay, that's good sign. If the call premiums are higher, then we can expect more premium erosions to happen. But the only challenge is we needed to see some volume fall happening in the Bank Nifty. If that is not going to be there, then the market is just going to get stuck. And also we will see the Bank Nifty trending OI data for a second. 107 to 79. Unlike Nifty, this at least have some kind of a cushion for you. The difference is getting larger and larger. Okay. So as the difference is getting larger and larger, you can see the directional change also. There was hardly anything. Now it is almost 83%. When you see the directional change coming into this, it will automatically give you the move. Okay. So this is something which I want you to consider. Now, what is happening with the India VIX? The global markets are like in falling and that is helping you. What is happening with the India VIX today? We'll track that. What has happened initially? The market started to fall and then the VIX started to climb. And the people who are wondering, what is this VIX candle all about? A long wick here. What is this all about? This normally happens in the opening candle and so on. Please ignore this kind of an erratic move. As I told you in the session, whenever you see this kind of a long wick, just ignore it. It might be due to some positions getting created and so on. It might be an erratic wick. If we are getting to see a consistent move, then it is going to be a problematic one. But there will be days wherein you will see this kind of an erratic wicks through the day. And that particular day, please ignore VIX as a factor. I would not even consider VIX as a factor on that particular day. But as of now, the VIX went higher and then started to again lower towards at 11 odd levels or 10.9 odd levels, which is clearly suggesting, Shiva, you are looking at different picture, but we are not going to be falling anything. If we are falling, it is due to long unwinding, not to any short positions getting built. I would love to see the VIX climbing towards 11.4, 11.5, 12 and so on. Then you will start to see a bigger selling pressure coming in. Okay, bigger selling pressure coming in. So this is how you needed to look at the morning, consolidate the data, whatever that you're seeing, and then wait for the right opportunity. Wait for the right opportunity. You can clearly see Nifty is not headed anywhere. They're just making sure that, Shiva, I'm just going to be playing near to the VWAP and the super trend. This is almost literally they are saying to themselves that we are not going to do anything. Moreover, if you look at the Nifty on daily chart, they're just trying to hold that 50-day moving average, which is a crucial support. After 20-day, 50 is the major support, followed by that the 200. 200 is way far off, which is at 18,530. The 50-day moving average is the area wherein they're just trying to defend. Yesterday they defended it well. They are looking for another round of defense. Why, if this breaks with volume, is a problem? If this area breaks, they know there is no immediate support similar to last time. They can continue to fall, and then you might get to support somewhere around 18,000 or 19,000 odd levels, and then we have to bounce. That's the reason the Nifty is trying to hold. The guys who would have put in the money, who wanted to take this market higher, they're all trying to defend these levels now. Okay, so watch out for that. Bank Nifty on the other hand, this particular area of 44, 560 odd levels, because this is the congestion zone last time and then it took off. Similar time, they are coming 1, 2. This is the third time. If they are breaking this today, in the coming days, it can get ugly. It can get ugly, and moreover, you have another 1,200 points. You will be getting towards that 200-day moving average, which will be the major support for the Bank Nifty, at least for a day. Okay, so watch out for these levels. And this is Nifty starting to show its color now. Will it be falling? We needed to wait and watch. We needed to wait and watch. Now, we have seen all these factors. Yesterday, we have also seen the trending OI crossover. Let's look at the trending OI crossover. Usually, the trending OI crossover normally occurs after 9:30, 10. This is on 15 minute. Can you see? There was supposed to be a crossover in case if it would have touched. But as of now, what you're witnessing, there is a gap which is getting widened. If you are seeing a crossover in the morning, it's well and good. Without the crossover itself, the market is giving you a clue. The call always keep increasing, the always falling. Slowly but steadily, you're getting a sentiment getting created that market is trying to falter. Okay, it's almost 11 crore here, 79 lakhs here. So, which is getting widened as the limit goes. We don't want both to travel together. I'll show you this. Can you see what's happening here? Both call and the put OI or travel. It's almost like a kingfisher bird, right? So, it's almost traveling together. This is something which we will hate it. Now, it is almost 1.5, 1.5. What will happen now? If it can move higher, the call OI can move higher and the put OI can fall, this is the crossover which we are talking about. So when the crossover is happening, I wanted a fall and then I don't want it to travel together. I wanted a big fall in the put OI, big increase in the call OI. So automatically the sentiment will go deeper in the negative, which is going to be good news for the put buyers. Okay. Now we will look at the Fin Nifty as well. What is the Fin Nifty data suggesting? Is this good? Both call and the put traveling together. That means it is in whose control? When both OI, call and then the put is traveling together, it is in the seller's control. So this is going to be a difficult one as a buyers to make money. Okay, so we needed a clear move to be happening. So even if we are not getting the crossover, if you are seeing a gap widening, then you can play according to the trend. You can play according to the trend. So Bank Nifty for me is getting more and more bearish compared to other two indices at this current juncture. But if Bank Nifty turns bearish, what can happen to Fin Nifty? Because Fin Nifty has most of the constituents except the Bajaj twins and a couple of other finance sector categories. Other than that, everything is almost the same. Almost 80% of the constituents is almost the same. So what can happen? It can have bearish look. Yeah, you can call it as a flying bird or whatever it is. It is what it is, and the market is proving it to be the way it is now. Now, I think Bank Nifty is slowly slowing its color. This particular candle, they're just trying to play for. Let me quickly look at the open and high if there are any. Okay, almost all the call side got hit. Put side also like in deep one got hit. This is going to be a difficult one. We will be covering the open and high concept next week. So you will be getting to understand how things shape out in that as well. Okay, Nifty after a while, it has turned into negative. You can see this now. Which is scaling up higher. Nifty is started to see its down move. Bank Nifty is also starting to slowly falter. But the only problem is these guys are not falling with the volume which we would have expected. Now, yesterday we were talking about the support and resistance line, right? Today I'll be sharing that video also. Where exactly I will be needing to draw a line. If you look at it, this is the area from where it took multiple rounds of support and then moved higher. This is somewhere around 11:30, 12. And this is an intermediate low which weighed around 230. So today you might get one round of support somewhere around here, that is 44,600 odd levels. Second round of support over here. So how do we determine the support levels? Based on the fall from where the recovery is happening, those are the levels to watch out for. Okay, so if you see a area consistently hitting that particular level and then not falling below that level and then moving it higher, that particular level will be called as a support. So if I'm looking for a support trade to take a trade on the upside, I will be using that level. So here, this is purely a gap a gap filling which occurred, and that's the reason the market tends to move higher. Now, for some reason, if they're making below the gap and then heading towards this territory, and if they're making a low, then you can expect 44,350 because that is the next level which was played in the past. So these are the levels which I normally have it for a month or two. And then once the index range moves from one level to another, we can keep removing them. Okay, so people ask me and how long should I be keeping these lines and everything? You can keep moving it time to time. It is also a buy zone provided it doesn't fall with volume. That's the reason this is called as a support. Once it goes above, what is this called? This is called as resistance. Why are we drawing this line as a resistance? In the past, that is the area it would have taken some time for it to break above, and even to break below, they would have needed some volume to make the market fall. You can clearly see whenever they try to take out the resistance, they will always try to take out with the volume so that the opponents give it up. Okay, the opponents give it up. Similarly, that's what they will be trying to do it here. If they are trying to take it up, they needed to break it with the volume so that the opponents will give up. You can see how many times they would have tested that level today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 odd candles were exactly to that blue line, and then they were not able to do anything, and then they started to falter. Okay. So now that we have looked at all the things in the morning, now I will be showing you what are the things which you needed to look at for the opening trade. Okay, the opening trade. Many people ask me, right, Shiva, like, how come you are able to take a trade for the opening bell itself? You are taking a trade at 9:15 and you are out by 9:17, whereas we do not see any candles or any formation. How do you determine that? Now I'll tell you, opening trades are the most risky trades, and I would sincerely say only the experienced traders should try it, not any newbies. Please stay away from the opening trade. The reason is it will most likely be a make or break. You might see the data showing you something, and if the market does something else, your mind will get frozen and you will not be able to take trades properly. And if you're not prepared to handle the morning volatility, I would sincerely say avoid it, because this is even for me in the initial years, though I love the volatility and other things, I would earn for 4 5 days and lose everything on fifth day because of the volatility. You will see several point move happening in the opening minutes itself. Sometimes there are days wherein we would have seen 300, 400 points were happening within first 15 minutes. So that is the kind of risk which you needed to ready to absorb. When I say ready to absorb, your stop loss has to be really big. Your target also needed to be really big based on your stop losses. Okay. Trade the morning opening only if you are able to interpret the data and someone who is ready to take a risk. Imagine in my scenario, if I'm using the previous day profit, I know this is the amount that I can afford to lose and then take trades according to that. First and foremost, what are the things which I normally look at? The end of day data of the futures, how it has done. Okay, so if you look at the end of day, what is the day yesterday's data suggested you? This is your yesterday's data. From a low, it moved higher and then almost trying to close it near to the day's high. No. After 3 o'clock, it started to give up and then it closed somewhere between the high and the low, somewhere near closer to the VWAP territory. This is not a convincing one. Okay. When I wanted to take a trade on the upside, I would have literally loved to see the market closing it near to the day's high. Then it would have given me a confidence to take a call trade. Next, apart from this, what else I would be looking for? The global markets. The global market didn't do anything. Plus, the Dow futures is trading in the negative. With that, the market is also not closing it at the day's high. Will I take an opening trade on the call side? No. I would sincerely try to attempt one trade on the put side. If I would have taken a trade today, I would try to take a trade on the put side. Next, the EOD data of the previous day holds good if there are no external news or the market movement that will impact the positions created before close. So, if they would have taken a position on the call side or on the put side, if they are closing it at the day's high, and if the global markets are also good, then you might see a big move happening on the call side. But in case if the market is in a neutral manner, you can look at the global data for the cues, and based on the global data, our markets tends to react. So if you look at overall data, this is the EOD data. You can look at it in OI Pulse. Go to EOD OI Analyzer. This is the data for the Bank Nifty. You can clearly look at it. Somewhere around 15th, we have been going towards 46, 200 odd levels. From there, it has almost given up close to 1,500, 2,000 points here. What is the data suggesting you? Can you see this? What is the data suggesting you here? Is it buying happening? Is it a short build-up happening? No. People who would have bought it in the past, somewhere around 43, 44,000 odd levels, when it went to 46 odd thousand, they started to unwind their position. That means they have started to profit book. They are expecting this index is not going to be moving any further higher. Let me book my profits. One reason is Nifty and Bank Nifty almost went to the overbought territory. If you look at the daily chart, it went to the overbought territory and started to do the booking. Now, what is the Bank Nifty doing now? Based on the data, whatever that we have been seeing, what is the Bank Nifty doing? It is heading towards a lower level. It is heading towards a lower level. Someone as a player, in case if you'd have looked at this data, morning, what you would have done? You would have taken a trade on the put side rather than taking a trade on the long side. Why? First and foremost, longs are unwinding. Second, global markets are not supported. Third, we have not closed it at the day's high yesterday, considering all the parameters. So with this all hindsight, we would have taken a trade on the put side. Next, the futures data will show where the positions are created. If you go and look at the futures data of yesterday, guys, since we are talking about the opening trade, we are looking at the previous day data. Got it? So this is your previous day data for Bank Nifty, Monday, 60-minute time frame. Can you see this? There was a short build up happening, and then a short covering happening, and then another short build up happening towards the day end, and then a short covering. So it is a day mixed with shorts only adding the positions and covering it, shorts adding positions and covering it. Was there any long build up happening? No. So long build up is clearly not seen at all in the picture, which is clearly suggesting, Shiva, we needed some support to be coming in from the other areas as well. We cannot expect our markets to outperform when all other markets are falling around. That is a message which is coming in. One good thing is the shorts covered a large compared to the short build-up. That is the reason you are not seeing a significant fall happening. Okay, otherwise what will happen is today you might see a significant fall happening in the morning itself. There would have been a large gap down 200, 300 points, and then the market would have been continued its downslide. As of now, since there was like a short covering happening towards the late end, we are not seeing a major fall happening here. Next, trending OI and market sentiment to understand the OI sentiment. How was the trending OI yesterday for the Bank Nifty? Just go and look at this. Towards the late end, what has happened with the OI? The market started to become bullish. Okay, it was bearish for some time in the morning, and then towards the second half, Bank Nifty started to become more bullish, and you can clearly see OI on both the sides have reduced. That means intraday positions, whatever that they created, they have unwinded the positions towards the day end, which is suggesting that they wanted to take it for the fresh day next day. They are not totally bearish, they are not totally bullish. Though OI is little higher on the put side, these guys would be little confident that we can expect a gap up. But unfortunately, when the global markets are not supporting, they will make it into a flat market rather than making a big gap down market, because they have not positioned themselves, right? When they have not positioned themselves, there is no point for them to take a big gap down because they are not going to make money. That's the reason you would see the flat market play taking place. And ideally, that has happened today. Next, how to prepare? When we have analyzed all these data points, okay, forming a view is first. What is the view that I formed it for today? First and foremost, looking at the global markets and nothing, I was expecting some selling pressure. Second, though our markets try to close it at the day's high, considering the global market queue, we might see some pressures coming in. But what can happen? It can also go wrong, provided if the market wanted to do something different. Again, remember, morning trades, you needed to factor all those. Not necessary, they will follow what you are expecting it to be. Today, yes, if I would have played it, I would have played it on the put side and it would have given you the results and everything. And one more thing to watch out for is the open and high. There are plenty of strikes on the call side, got an open and high. When I explain the open and high concept, you will understand that. That is something also we will consider. Again, make sure that when you're getting into a trade, imagine if I'm getting into an opening trade in the morning. I wanted to short this market and I'm trying to take a trade at the open itself. What I would needed to do is, once I take a trade, if it is going in my favor, trail it. If it is not, keep a level. How will I keep a level? Imagine, this is the day's high yesterday towards the late end. So market tried to go higher here and then started to falter. Now, for some reason, if there is a like in a gap down or like in a market falling, and I'm taking a put trade here, and where would be my stop loss? The level at which it started to fall, right? I will keep this level as my stop loss. Imagine after 1-2 candles, quickly the market tries to recover and go above. I needed to book my loss somewhere around 9:50, 9:30. Usually the opening trades which I take, it should not last beyond 6 to 9 minutes. Okay, 90% of the time I try to close my position in the opening minutes itself. But if I'm taking an opening trade based on previous day data, try to not extend it beyond 9:30. Okay, 9:30 should be your maximum time, whether be it a profit or loss. If it is in profit, trade it. If it is in loss, wait for the levels, and if it is getting triggered, exit your position. Here, never ever try to pyramid your position. You have 5 to 10% of your capital deployed here. Because this is, you do not know, you're fighting against an unknown enemy. What they are going to be doing today, no one knows. So you are just entering based on the previous day data and the morning cues. When you are doing like that, try to not deploy a large resource because it can go completely against you as well. Out of the 5 or 10% capital, even if you are losing 10%, you will not lose beyond 1%, okay, on your overall capital. That's the reason I'm suggesting you not to deploy large capital in the opening trade. But what can be the advantage here? Sometimes when the trade goes in your favor, whatever your day's target, you will be able to achieve it in this one particular trade itself. 90% of the time, my trade goes like that. Okay, so I'll show you a few examples, then you guys will understand what we are talking about. So if you look at this particular day, every hour the market was trying to make a good move with the volume. First it was long build up, then the short build up, long build up came in, again short covering came in. Then towards the last 2 hours, who dominated it? First is the short build up, next is the long unwinding, both belonging to the bears. The bears took advantage at around 130 to 230 and then 230 to 330. But look at this fall, 300, 100, 11, 260. There was a big fall happened between 130 to 230, almost 800 points plus 200 points here, which is clearly suggesting the bears have taken a complete grip. A short build up during the second session and long unwinding is seen, and long unwinding is seen towards the end of the day. That means any buyer who was having a hope that this market is going to be going up, they all would have given up here. An indication that the buyers are not confident taking this market higher. Fresh positions, where exactly I will now create the positions for next day. And if you look at it, after a while, the market started to tank big time, and this is also going to be a reason wherein you can expect it. This is on 1st February, right? Okay. So, next day, based on this data, run up to this event, long unwinding seen on the previous day, and most importantly, 1st February, what was the day it is? It was also the budget day. And one more news, the trending OI data, everything showed you a big build-up happening here. Where exactly the covering is happening? The OI is still intact on the call side, whereas they have started to cover it on the put side, which also would have forced these guys to hold the positions, or we would have taken a trade on the downside. This is your market the previous day. Market tried to recover and then almost tried to close it here. Based on the data that I would have taken a trade on the put side. The opening trade, it would have given you on the opening candle itself. But in case, if you stuck around the opening candle, can you see what has happened? The market tried to recover. But one thing which you see it here, there was a gap. Again, the markets came down to fill the gap. Okay, so I would definitely try to use all those as an opportunity to make money. So in this scenario, what was my morning trade? I would have entered because it was clear to the previous day rejections. I due to the previous move, and then one dip, making sure that RSI is below 30, and there was 250 point move which occurred, and just out of the day. Can you see this? Rejection, and then an entry. And then this is more than sufficient for 200 points in the next 5 minutes. Once you are done, you're out. And then market rallied. There was another opportunity because there was a gap getting formed. And then the market started to tank again. So this is like in a morning trade and then a gap trade after a while. So everything played out according to the situation here. This is how I normally analyze and then take a trade. This is a 1 minute time frame which we have shown mainly to see how the candles getting formed in the initial morning. Usually 3 minutes is more than sufficient because you will get the opportunity for you to enter in the opening candle, get an exit also in the opening candle itself. Guys, don't try to do it in the 1 minute. This is just an example which we have wanted to show you how the candle, because on this particular day there is a big move happening, right? So how it is forming and everything. I don't want you to follow 1 minute because it will be way too fast. Some of you may not be able to do anything. So what's the market doing now? Is it trapping the people? Went lower without the volume. If you're chasing a market, you can get yourself trapped. 90% of the time, traders tend to lose money. They think that the market is falling and they chase it. But if you don't look at the volume, what can happen? It can move like in almost from 44,600, it has gone to 44,700. 120 points is more than sufficient to wipe out any retailer's stop losses. That's exactly the market is doing now. Okay. So with that, I've given you all the insights what I would be looking at in the morning. So watch out for all this data and then try to take a trade. Guys, in the meantime, we have also shared the PDF for day 4, 5, 6. How many of you are going through all these PDFs which has been shared to you all every day? Guys, we have taken so much of effort because every document what you guys are going through, it is all created just for you all. Okay, it is not from the previous session or anything. As we are doing it, we are doing a recap. My team is really doing it. So we wanted to ensure that we wanted to give you the updated latest documents so that you don't miss out. Even when you're going back, looking at the recording, if you're not able to recollect something, when you're going to look at the document in same, you will be able to get everything. Okay, so use it like an even, not now, even say for example 6 months or 1 year, when you go for a break or something and then coming back, before you start the market, go through the documents once so that you will be familiar with what are the terms and how we have used it and so on. Then it will be important to go through. Okay, so to conclude, at this juncture, based on the more like an opening and everything, what we would have done, we would have taken a trade on the put side in the morning. The reason is the global markets are little under pressure, and the most important thing is that we do not have any positive cues emanating from our market. And one more thing, the Dow, like in Dow, yesterday was not doing much, and then the Asian markets are under tremendous pressure, which would have forced me to take one round of a trade on the downside rather than taking it on the upside. Now, day after tomorrow, the session is going to be starting at 8:30. The reason is there are two. One, we needed to analyze the market for the expiry day and also for the opening trade, and also how we are going to be learning the expiry day strategy, which I'm going to be teaching you all today, how you are going to be deploying that in the live market. So I hope you guys must be ready for that. So after this break, what we will be going through is, we will be going through the BTSC strategy and also the expiry day strategy. Okay, these two are going to be very important. Please ensure that you guys are back with a clear mind. Go have a cup of coffee or like in whatever that you wanted to have it. Just come back. Guys, no one will be able to predict what is going to be the next candle, whether it is going to be a large volume candle or a small volume candle and so on. Rather than thinking about how it is going to be, it is our effort to go and find the direction and then go along with the direction. So yesterday, if you have looked at it, the market gave us a perfect opportunity to know this is going to be on the upside. But they came down, filled the gap. Again, they went higher because someone who would have missed the rally, this guy wanted to go, take it higher, and then came back, gave it up. Now these guys are just playing near to the VWAP and super trend. That's the best time. If you are not wanting to like and take any trade, get out of the system and don't be there in front of the system because that will lure you to take a trade. Okay, lure you to take a trade. Yes, there is no session tomorrow because we have the next session on Thursday. Thursday, guys. This week we have 3 sessions. And can you believe it? Next week our mentoring program is about to end. It looks like as if we have just started and then it is quickly getting to a closure. How many of you feeling bad that like we are going to be ending our sessions next week? Guys, that's the way life is. Don't think that I'm going to be there with you all the time. But whether I'm there or not, I want you guys to keep up the momentum and then take it forward. Okay. I know many of you would be missing me, missing my voice more than me. But don't worry, as and when I do any sessions in the future, I'll like in at least in the next 1-2 months, any commentary sessions, I'll make it complimentary for all of you. Yes, next week we'll be having a Q&A session as well. Yeah, I know. Some of you have been messaging me, sir, you're troubling a lot because you're coming in the dreams with your voice. Okay. Okay, guys. On that note, we will take a break and then we have 2 important things to learn after the break. Okay, get ready.
Recording stopped.